Increasing interest rates, very hot topic of 2022. I'm Sarah Logue and I'm joined with Caroline Moore to talk about what is going to be the impact if we see our very low interest rates actually start to climb for 2022. So that is the question that I keep getting asked over and over by clients. Should they wait next year for their buy and maybe get an opportunity for a lower price point, or should they be buying now before the interest rates climb? What are some of the projections you're hearing for 2022?
So experts are saying that we are going to have increases. Okay. However, how many? That's still to be seen.
Okay.
So you are going to have interest rates rise, as we're seeing, like previously the fixed rates of interest rate has risen. Variable rates also will increase because the Bank of Canada will increase their rates. So we're maybe looking in the next 6 months for sure.
Wow.
But they are going to increase, but we just don't know how much.
So everyone's sitting on this plateau, and everything I read and all the experts that I'm hearing and talking to you regularly says basically 2022 is going to see a bit of a flatlining based on the fact that there is no way we can hold these low rates.
No.
Right? So projections are either 1 to 3 times could happen over the next 3 to 6 months, and we'll see that increase come up. So how is that going to affect buyers for our team as they're, going to make their home purchases, and we're forcing them into these insane bidding wars? How are they going to be able to purchase if rates go up and we're still climbing in these incredible numbers?
So they need to make sure that they have everything set in place. They need to make sure that they speak to their mortgage broker. They need to speak to their bank. They need to have a look to see what their options are. There's always ways to purchase, whether it's private lender, a B lender, A lender, but there's always ways to purchase, and it's just to make sure that they have that set in place, that it's in place, and talk to somebody, know what their monthly expenses are, know what their variable cost rates are for the month, because those are also increasing as well.
I think that's a great lesson that you just taught to clients of ours recently, where they were very excited because they were approved for a nice big number, but then you pulled them back a little bit and reminded them about car payments, daycare, grocery bills. They're complete fixed nuggets. So that's where we love sending clients to you, because as a broker, you're reminding people what's your monthly cost, not just what your mortgage payment is.
Absolutely. You have to make sure that the product is right for them, as well as that it fits within their lifestyle. People don't take account that fact is that they have that huge daycare cost, or that their food is increasing. Like, I think milk is increasing by 80%, which is crazy to think about prices. So we really do have to make sure that we have those conversations with the people about what their monthly expenses are. They want to live within their means, not outside of it.
So what are the advantages? Like, we've obviously been able to refer you for many years, and we love that you're a mortgage broker and you've been able to give our clients so many options. Explain the difference. Like, we have lots of clients that want to go to a bank, and that's fine, but we do have the option of using a mortgage broker.
Absolutely, because I have the option to go to many different lenders, whether it's a credit union, a B lender, a private lender. We can look at their options, see what works best for them. With a bank, which I have friends that still work in the bank, and it's fantastic, you're only set with the bank. But with a broker, we have options to go to different lenders and have a look at your scenario to see what fits.
So I think that's the best advice moving forward. If you're really unsure, because the market is a very unsure platform for next year, make sure you're talking to your financial planner, make sure you're meeting with a mortgage broker, find out what your limits are, stay within them. The market will force you sometimes outside those limits. Make sure you know what your max is before you go into play.
Absolutely, and make sure you have all your T's crossed and your I's dotted to make sure that you go in for those purchases, that you know what you're going into.
Very good advice. I'd say definitely reach out to a mortgage broker and plan for increases in mortgage rates. I think it's just a pending matter of time before we see it, and it is, and most likely will slow down some of the competitive bidding as people's buying power shrinks. If you're looking to understand the market as it moves forward into 2022, please reach out to us at teamlogue.ca.